Hello, you can follow me Gumby9662C on Twitter. Like the video if you like it, and I appreciate all the comments you can at the bottom of the YouTube commentary. But anyway, what's dragging down the markets right now is crude is selling off to new lows here right now. I'm watching the XLE here on the weekly, and we have a yearly pivot that we're right at on XLE right now, which should act as some sort of a resistance area. Plus, we are right at the 50-day weekly. We're crossing below it right now, but it's the 50-day weekly moving average. That should also act as some support at this zone right now. So I am thinking about either lottos that expire tomorrow or next week, and add some of the energy stocks to the long side, thinking there's a potential for a short squeeze right here. Okay? And then also on your crude, you're right now on your Ichimoku, you are on your support line as of right here, right now, with the 50-day moving average right below it on the weekly. Okay? So this is a logical support area for crude to take a low risk, possible high rewards trade in the energy space if the markets do catch a bid tomorrow. And from my charts, I think they will. Another development today. We get that jobs report tomorrow. We are likely going to break out on our TNX, in my opinion. And that's interest rates. And if that's the case, some of the more defensive sectors are going to probably catch selling pressure tomorrow. XLU, your utilities tend to do the inverse to interest rates. As interest rates go higher, your dividend paying stocks tend to go lower. Okay, they're inversely correlated. We have broken the 20-day SMA, and we're kind of basing out right here. But I do think your utilities are overbought here if interest rates hold. Another area, your dividend paying stocks, your XLP, consumer staples. They are lagging the markets, and they are testing. They're right down here testing the 20 SMA. If we get a breakout in those interest rates, you can see a sell-off tomorrow in your consumer staples, in my opinion. Now, tomorrow, whenever the jobs report comes out, we could very easily catch a bid in this market. There are still a lot of bullish signals out there. We do have this trend line I have been mentioning in several of my videos that we're coming over to and testing, and we do have a supporting value area right below us here, giving us the support, but we are below the 20 SMA on our consumer discretionary. And so just keep a really close eye on this. I'm not for sure how these markets are going to pan out after the jobs report. There is some it does seem like the distribution, people are taking money out of the markets, so keep a really close eye on this one here. If anything breaks, I think the consumer discretionary is going to be the place. And the reason I'm saying the consumer discretionary is in trouble right here, we had some decent numbers out of Sears this morning, and we had an initial pop, and we're doing this bear flag on the trend line with the retail. We are trying to break down on our retail right here, right now, going into the close. That's why you got to be very careful going long into the jobs number tomorrow, because retail looks like it's wanting to roll down even further, in my opinion, and consumer spending is not looking very good for the U.S. consumer. Your XLI, we are crossing below the 20 SMA. We are right at that today. So keep that in mind. We are actually we have price action below the 20 SMA right now, and we are testing this uptrend line. So just keep this in mind. It looks like your industrials are going to break down tomorrow. So that's why I'm starting to lean more that we're going to have some bearish action in the markets even after the jobs report does come out. Your technology space, your XLK, still bull flagging up here right above value, holding out like a champ. So there's no problem with the technology space yet. Another warning sign here. We are getting higher interest rates, but the financials are not putting in that much higher here. So just keep that in mind. We're getting a little bit higher on the financials, but you would think that the financials would be leading the way here. They're kind of disconnecting from interest rates here a little bit. And we do have this accelerated uptrend on financials, and it's also testing this accelerated uptrend. So there's a lot of reason to think that there's going to be some money coming out of this market either tomorrow or the first of next week. Healthcare, like I had mentioned in my prior video, I think the home builders and healthcare are going to lead the markets here in the not so distant future. We are above the 20 SMA again, and we are trying to break out a value. This is typically a responsive sell zone for healthcare, okay? So you do not want to add to loans at this area. But if the markets turn weak, the healthcare is going to come down with the markets. So just keep that in mind. We do have a parabolic move in healthcare. But there is, if the markets do continue higher, healthcare should lead the markets. As we speak, the consumer materials, they are trying to push out of value right here, but we do have the 50-day moving average right below us. So I just want to point that out. We're right down here. Typically what you would consider this to be is a buy zone to the long side in the materials area, and we are above the 50 and above the cloud. So just keep that in mind. I don't see a lot of force pushing the materials sector lower for the rest of this week at least. So we do have some support here, and this is a responsive buy area. If we do catch a bid in the markets tomorrow, the materials are probably going to lead the market tomorrow, in my opinion. Okay, that's all I got to say. It gives you a little quick rundown of some things. Oh, let me show you something. A trade that I'm looking for, 49.36 is our support line, Ichimoku support line on weekly on Halliburton, and we're coming crashing down to this tomorrow. And so I'm thinking if we can get down to 49.36 area before the close, I am going to take probably into next week a long position in Halliburton, realizing that we do have some support in the energy space at these levels. As I mentioned, the XLE does have some support at these levels, and if that's the case and we do get some rotation back into the energy stocks tomorrow, Anadarko Petroleum is right here at the 200-day moving average, so keep that in mind. I don't like this one quite as well as Halliburton because I do think the real buy point is 58.80, but this is something you may want to consider for tomorrow. Another energy stock, ExxonMobil. I have a price target of 80.30 for today, or an alert set. We haven't come down, crashing down there yet, so we'll see what happens on the energy space into the close. We can get a flush lower. I might pick up on this. If I can get ExxonMobil down around 80.30, I would take this for a swing long position with a tight stop going into tomorrow. Another one that on Lloyd's little screen there, I saw CVX hit. I was watching it right when it hit, and we are getting some responsive call activity at this point on CVX. Not to say that it's going to hold, but I'm just pointing out that there were some large call buyers coming in down at these levels. It hit a reference fib zone, and to the tick, it was the calls started hitting just a little while ago. Okay, that's all I got to say. Just be careful going along this market because there are accelerated trends on multiple major sectors that look like they're going to break tomorrow or the first of next week. Thanks a lot.